Hello, good evening, ladies and gentlemen, traders and investors. This is Alex from MarketWise Asia. Thank you for watching this live stream both on Facebook and also on YouTube as well. So as you can hear now, okay, my voice it is actually pretty sexy. So since last week after I did during my members only webinar for my seasonal Vantage Insiders, I already have no voice really. Okay, yeah, I'm still coughing right now. So in fact, I didn't want to do this live stream tonight because I think that I'm still not feeling that well. My voice is a little bit sexy, so I wanted to take a break now. But after that, Friday, okay, the market crash, okay, and then today, Monday morning, the market was down about 3-4%. Okay, I think that I have to do this live stream. I mean that not that I need to do. Okay, just that I think that it is good to do. Okay, so that I know that my members and also some of the public members are able to understand what's happening in the market right now. Okay, so the thing that I want to share right now is that okay, relax. Okay, so these kind of market crashes okay, I've seen a lot of times already since I've been trading the market since 2011. Okay, so yeah, I mean that nobody knows whether this is going to be a take cap bounce or really a real reversal. So I'm going to share my views later on. Okay, all right, so before I kickstart, okay, just want to share with you that today whatever I share today is just for education purpose. Hey, by the way, yeah, if you can hear me loud and clear, right, just say a hi to me in the comments and also give me a like, share, and comment. If you think that this, at any point in time, if you think that this live stream is going to benefit your friends, family members, who are very afraid of this market crash, don't know what the fuck the market is doing, very scared, that kind of thing, okay, do share to them, okay, this live stream, okay. I mean that maybe there are some of you guys who are maybe new to MarketWise Asia who just joined recently due to the Market Insights Conference, okay. Yep, any point in time you think that this is going to be useful to you, you can give me a like and share to your friends or family members as well. This really helped me a lot and also get this message out to the rest of the people on Facebook and also on YouTube as well. So just say a hi to me, Dave, Will 555, okay, WM, Dave, San, okay, William, Mark Chow, okay, Meng Heng, yes, drink more water and take care. Thank you so much. Mike, okay, Sam from KL, thank you so much. Okay, Gilbert, Joseph, Christopher, Ingfish, Jiaru, Tessa, Jenny, okay, Yan Ling, Lilian, Pei Wen, thank you so much. Hi, Mary, good to see you guys. So I will be coughing. So I mean that I think it's getting better. Just that I will still cough. So pardon me, okay, if I cough and I cough into the mic because it can be sometimes unknowingly I will just cough into the mic. Okay, all right, Effendi, good to see you. So let me just share my screen right now. Okay, let me just adjust my screen so I don't do talk a lot of nonsense. I'll just go straight to the point and tell you what's going to happen in the market or what I feel is going to happen to the market. Okay, all right. So let me just do this. Okay, all right. So whatever I share today is just for education purpose, not a recommendation to tell you what to buy or what to sell. So please do your own due diligence. So first of all, for those who just know about MarketWise Asia recently due to the Market Insights Conference, okay, registration, okay, do follow us on our various social media channel. Okay, so the link, I will post it in the chat and also in the comments as well. So this is going to be the link just in case you do not know over here. So inside this link contains all our social media, various one, Facebook, Telegram channel, YouTube, TikTok, X, okay, and our website as well. Okay, let me try can post. Okay, can post. Okay, all right, so it is all there, especially Facebook and Telegram, where sometimes I will share with you the price mover, the morning rep, etc. So what's happened in the overall market the previous day before. And if you're watching this on YouTube, do subscribe and give me a like. Okay, it just take you 1 second. Okay, very fast. Do subscribe to our YouTube channel. Okay, and before I continue into my main gist of the topic, right? Okay, just to let you guys know first. Okay, towards the end of the month, okay, there will be the Market Insights Conference 2025, okay, on 26th of April, okay. It is going to be a Saturday, okay, afternoon, all right, 10 a.m. to 3 p.m. at Suntec Convention Center. It is going to be in-person, okay. The first 200 attendees, okay, will receive a goodie bag, okay, worth $58, okay. So this is the website link over there. So let me just head over here, okay, and post the link, okay. In case can't comment too much, okay, I'll just post the link directly. In other cases, you can also see the link, okay, on the scrolling bar. Actually, it's very simple. marketwiseasia.com/MIC2025, okay, MIC Market Insight Conference 2025. So in this page, you'll see this site, okay. This event, it is proudly hosted and sponsored by forex.com, okay. In case you don't know, okay, City Index, okay, City Index Singapore, okay, is going to be rebranded into forex.com. So essentially, it is the same, okay, City Index rebranded to forex.com. In some cases, you may think that, okay, you might come across forex.com or it might be foreign to you, but actually it is not foreign, okay. It is part of the StoneX group under City Index that's going to rebrand it into forex.com, okay. So as mentioned, 26th of April, 10 a.m. to 3 p.m. Okay, we have quite a few heavy weights here. Okay, so we have Shay. Shay, this is from Humbert Trader. Okay, how many of you here know her? Okay, Humbert Trader. If you know about Humbert Trader, just type HT in the comment. You have heard of her before. You have seen her on YouTube before. Okay, just type HT in the comments. Okay. So we have these speakers over there. Shay, okay, founder of Humbert Trader. She has, in fact, 1.32 million, okay, YouTube subscriber. If you have been watching trading videos long enough, you might have heard of her. Okay, so she flew all the way, okay, from Canada, Vancouver, okay, to Singapore, okay, to share with you about trading and also about swing trading and also the market outlook given the market condition right now. Okay, she's going to talk, share with you on the 26th of April. And of course, we have Alvin Chow, CEO of Dr. Wealth. Okay, Caden Chang, founder of Value Investing Academy, and David Scott, okay, from StoneX Financial. Okay, he is the market analyst for the Apex region. Okay. So all you have to do, it is just to register for this event. Just click here. It is a built-in Eventbrite. So all you have to do is just to click register. Okay. It is free. It is free. Okay. Fill up your name, your details. Okay, and you are good to go. Okay, this is actually my partner's name. Okay, so fill up your details, your name. Okay, and you are good to go. Okay. Okay. Can everything okay? Everything okay? Just type okay in the comments before I move on. Okay. All right. So the economic data for this week, I'll just briefly go through. Or today there are slightly more people on my live stream. Okay, because I think the market crashing now. Okay. All right. So this coming week, okay, Thursday, there's going to be FOMC meeting, that's Singapore time, Wednesday midnight 2 a.m. And at 8:30 p.m. okay, there's going to be the CPI data as well. Okay, Friday, core PPI and also the consumer sentiment and such. But I believe, okay, all these will pale in comparison, okay, to what our president Trump is going to say within the next few days or so. Okay, at any point in time, he can tweet something, say something, and it is going to move the market. Okay. Let me take a sip of water. For those who just joined me, I really appreciate if you can give me a like, share, and comments. Okay, so I try to keep my energy a bit higher because, you know, my voice are a bit sexy. If I continue in my low voice, okay, it is going to bore a lot of you down and go to sleep. Okay, all right, so let's kickstart. Okay, by now, you should know, okay, I was actually on April 2nd, okay, over the weekend, I was actually in JB, okay, I went for a staycation with my family in JB, you know. Like I mentioned, I have no intention to do a Facebook Live because I was coughing. So maybe take a break. Then Friday, market crashes. Then Monday to today, pre-market, it just slided, diving all the way down. So I intend to do this live today. Okay. All right. So on the 2nd of April, Trump announced a 10% tariff. Okay. I believe you guys should know right now. With a higher rate for country with larger trade deficit. Okay. So I'm just going to brief through some of these. Okay, you might have already know. Okay, so the tariff impact, okay, is projected to rise right from 2.3% to 20 to 25%, okay, the highest in 100 years. So in this chart, okay, you're going to see what is the impact on the various countries over here. Okay, so open in a new tab, okay, so can see better over there. So after, okay, the trading tariff, okay, the reciprocal tariff rate, okay, you can see that China, okay, it is now the tariff rate, okay, 20% plus 10% plus the original previously, I think it's 30 plus percent, I don't know what, okay, total is 54%, okay. Vietnam, ASEAN, okay, is the highest at 46%. Thailand, 36%, okay. In fact, a lot of these Asian countries, it's quite a high tariff rate, okay. For the European countries, okay, it is a flat at 20%. Of course, Singapore, I think we are the lowest at the base rate at about 10%, which means that whatever good, okay, there's a manufacturer produce, whatever it is that is in Singapore, in various countries, okay, that country, okay, we export, okay, to US, the companies will be, you know, have a tax rate of, you know, Singapore at, for example, 10%. Then in China, okay, it is 54%. But of course, there are some sectors that are excluded from this tariff rate. I think, for example, if I'm not wrong, I think some of the semicon, okay, products or industry, it is exempted from this tariff. Not all. Some are exempted. Okay, all right. So China, of course, they are a very big country. Okay, the second biggest in terms of economy. They kind of retaliated, okay, with a 34% on the US lah. Okay, all right. So how about Canada and Mexico? So the rest, okay, I didn't really check it out. Okay, you can go check it out, but all these are not exactly the important. We just importantly know that, okay, many countries are faced with tariff and the baseline 10%. So of course, you know, the news triggered a sell-off, okay, on Friday, and the Treasury hits the lowest since October 2024. So you can see from the S&P 500 cash index on the Friday, 4th of April, okay, suddenly on the 3rd, okay, it gapped down 4%. Then on the Friday, it gapped down to minus 6%. So it consecutively dropped quite a bit, okay, all right. So what are the risks, okay? Of course, you know, I think by now you have read the news or some of the, you know, social media, okay, might slow US growth and push prices up short term now, okay. And but the good news is that the US economy is entering this, okay, from a strong base, okay. The Fed, I think last week, okay, the Jerome Powell actually spoke, okay. Jerome Powell actually spoken, but he did not mention about the US stock market and whether he said that he's going to reduce the interest rate or not. But in fact, that's what actually Trump wanted, okay. But not of now, okay. I think personally, okay, Trump and Powell is not on good terms, okay. And by right, okay, the US government and also the Fed, it is actually independent of each other, okay. But one thing I want to let you know that, okay, this current sell-off or the market crash, okay, is not actually so-called due to the boom and bust of the economic cycle. This is actually so-called artificially induced. I think previously during my live stream, I've said quite a number of times, okay, the US fundamental actually remains strong, okay. I think previously you can go through my previous live stream. The companies are still earnings, are still growing, okay. Unemployment rate, okay, it is still low. The labor market force, it is still okay. And previously, okay, before the pre-tariff, there's a low recession risk, okay. So overall, the fundamentals of the economy, okay, it is still good. So this decline, this market sell-off, it is actually artificially induced market crash, okay, triggered by this tariff announcement, okay, by Trump. And it is not due to the deteriorating economic condition, okay, all right, or some black swan event like COVID 2020, or like 2008 global financial crisis because of the subprime crisis. Okay, do you understand what I'm trying to say on this tariff-driven decline? Okay, if you understand, okay, just type letter T, okay, in the comments. Okay, so I would really appreciate you can give me a like, share, and comments. So right now today, in fact, really a lot more people attending my live stream. So total there are about 230 plus combined based on Facebook and YouTube together. Okay. Long story short, we currently go long, short, or hold. Why don't you tell me the answer? Don't worry, I'm gonna go through that. Okay. All right. So this it is I'll go through my view right now. Okay. So this is the whole thing that's happening right now. Hello, Yang. Okay. So I want to let you know this is what the market it is currently doing right now. There are a few things that I want to go through with you. So it is not in the most important first or what. Okay. There are certain things that I'm gonna go through just based on the certain things I go through. Okay. Like for example, okay, not just okay, a few things. Okay, it will go through price action. Okay, I will go through the market sentiment. Okay, also market internals. Okay, market breadth, what the whole market is doing, and of course the market flows as well, the option flows and all these are not just purely just on the price action of what the market it is doing right now. So this is the S&P 500. Okay, so I just want to do a very quick so-called views or polls right now. How many of you think this is just a dead cat bounce? If you think that, okay, this is a real so-called market crash, okay, the market will most likely have some bounce, but it is going to be a dead cat bounce, okay? It will come down further, okay? You can just type cat in the comments. If you think that, okay, this so-called market crash is just temporal, okay, the market, okay, it is going to reverse up really soon, okay, you can just type rally again, okay, just type rally. So which one? You think it's a cat or you think it's a rally, real rally, okay? Let me know your answer. RP, I want you to know your sentiment. This is quite important. Right now, we have a lot of people. If you think that this market crash, okay, it's going to be a dead cat bounce. Market cannot just continue go down forever like that, okay? It is, okay, going to have some, I don't know when, it's going to have some rebounded rebound and then come back down again, or it's going to be a real reversal, okay? It's going to be a dead cat bounce, or you think that it is going to be a reversal, okay? Let me know your answer, okay? Of course, I know nobody knows lah, but I want to know your views lah, okay? I want to know your views. This is quite important, okay? So quite a lot of people know that, okay, quite a few, okay, think that it is going to be a dead cat bounce. A few say rally, okay? So it's like, if I'm not mistaken, it's like 60% think that it is going to be a dead cat bounce. Am I right to say that? About 60% based on you can see from the chat right now. Does it seem to you like about 60% or 70% think that it is going to be a dead cat bounce? Okay, something is going to be a rally, okay, soon, okay? So I just want to go through with you, okay, what happened during the 2020 COVID sell-off over here, 20, okay, all right. So, okay, I just want to go through with you 2020 COVID sell-off, okay. All right, so at that point in time, okay, this was like the first major market crash ever since the 2008 great financial crisis. So we have to go back to 2008, 2008, remember 2008, the great global financial crisis. After that, there are a few so-called crises and correction. For example, I remember very clearly when I first entered into the market was in 2011 April. Okay, that was the first time I entered into the market, and shortly after I entered into the market, there was the euro debt crisis. At that point in time, okay, the market was every day talking about the euro debt crisis. It seems like it's like a very big event and such, but in fact, it only dropped about like at the most about 20%. Okay, and then continue to go up eventually. Okay, along the way, there are a few other crises. So in fact, the market had a very, very long bull run, okay, until the COVID crash in 2020. Okay, I'm not sure how many of you have experienced that. So at that point in time, okay, I thought that this is it. Okay, this is it. Okay, this is the market crash that I have been so-called waiting for the longest time. Okay, if the market was going to drop 50%, okay, I'm going to buy the whole freaking market, okay, or the whole stocks up, because if you remember, okay, in 2008, all right, the market actually declined how many percent? Okay, from the peak to the bottom. From the peak to the bottom, it actually dropped about 57%. 57%, okay, 57%. Yes, 2008 was worse, okay, was the first in modern history, okay. Of course, you don't talk about the dot-com bubble. I believe right now, not many people have gone through the dot-com bubble, okay. At that point in time, I was only teens, okay. I know that because most of my live stream viewers is about 30 to 40 plus, okay, which means that the earliest recollection that you have, okay, or maybe you can have so-called involved in the market, okay, was only 2008 or 2009. That was the earliest, okay. If you've been through the dot-com crisis and you have been inside the dot-com crisis, okay, right now, most likely you are above 50 or 60 already, okay. All right, am I right to say that? Yes or no? Correct or not? Brandon or Ingfish, okay. So for those 30s, 40s, right, like I'm 40, no, I'm not about, I'm 42 this year, okay. In fact, during the 08 crisis, I was only studying, okay. I was only studying, okay. Just graduated from the university, okay. So let's don't talk about dot-com crisis, okay. My live stream, I think most of you, I think about 80% would not have gone through the dot-com crisis, okay. All right. So at that point in time, okay, I anchored that, okay, this dot-com crisis, I'm going to wait for that 50% drop, then I'm going to buy the market. So what actually happened? Okay, okay. So the market only dropped 35%, okay, but okay, 35%, and then the market just have a V-shaped recovery, okay. So at that point in time, okay, all right, I was actually waiting for a relief bounce, dead cat bounce. I think that this is not going to be the real crisis, okay. There is going to be a dead cat bounce, and the market is going to tank further to about 50%. So I was anchored at the 50% mark, okay, that the market is going to give me a huge discount at 50% mark, okay. But it didn't, okay, it didn't. So at that point in time, if I'm not mistaken, okay, also a lot of people did not think that it is going to be a V-shaped recovery, okay. A lot of people think that it is going to be a dead cat bounce, okay. So what happened? The actually market do the unthinkable and do a V-shaped recovery, okay. And the market, by the time it ready off, it is way off the low already, okay. So once again, at this point in time, okay, all right, so it is like that, okay. All right, it is like that. So the market, it is actually very volatile right now, okay. So at pre-market, it was down about 3%, 4%. After that, we recover, it is down again, and it is out again. So right now, okay, I need to tell something that is very important, okay. You need to have second level thinking, okay. Again, nobody knows, but you need to know what is the second level thinking. You need to anticipate, okay, what other people are anticipating. You know what I'm trying to say, okay. you need to anticipate what other people are anticipating. Okay, the stock market is not just about you. Okay, it is what other people think of the stock market right now. Okay, all right, can you just type AA if you understand what I'm trying to say? Okay, I'll explain further. Okay, so right now, the magnitude of the 2020, okay, was actually very fast. So that caused a potential, in hindsight, right now, we know that, okay, because of the magnitude, it is very fast, it caused a V-shaped rally, okay. So right now, the magnitude, okay, it is also very steep. Okay, in these modern times, I think that moving forward, most likely, okay, the magnitude of all these crashes is going to be very fast because, you know, information travel very fast with the internet. Okay, within a click of a button, everybody knows what's happening right now. Okay, plus the algo trading. Okay, that is going to exacerbate, okay, the sell off. Okay, because a lot of this algo trading, okay, it is based on, for example, okay, trend trading. So when they see that, okay, it is selling, okay, they'll follow the trend and sell some more. And when other algo see more selling, it lead to more selling some more. So it is a positive feedback loop. Okay, selling lead to more selling. Okay, but of course, at the end of the day, okay, it cannot continue to go down like that. It cannot continue to go down, okay, like that. Okay, all right, eventually it's going to stop reversing. Okay, so right now, from what I see, okay, from the poll right now, a lot of you guys are anticipating a dead cat bounce. Okay, anticipating a dead cat bounce, which means that, okay, most likely the market might have some rebound, and then this is going to be, okay, a fake rebound, dead cat bounce, which means that, okay, you know, you throw a cat, okay, high enough, okay, the cat, okay, it is going to rebound higher, even if it's just dropped to the floor. Okay, even if it's dead, okay, the rally is dead, it's going to drop and bounce some more. So this is the meaning of a dead cat bounce. Okay, so which means, okay, there are a chance, okay, that the market, okay, might do the opposite. Okay, it might have a V-shaped recovery and such. Okay, I'm just guessing. Okay, I'm just telling you that, okay, most of the time, okay, the market will not do what most people are anticipating. Okay, you get what I'm trying to say about this. Okay, if you understand, okay, once again, just type AA. So this is based on the second level thinking. You need to understand what other people are thinking. Like the previous 2020, okay, I was anticipating that the market is going to do a decade bounce, but it did not happen. Okay, so you need to prepare that, you know, the market will do the unthinkable. Okay, the market will do the unthinkable. So if the market do the unthinkable, okay, you need to be so-called change your views quickly. And this have to based on the price action and of course the market sentiment, the market breadth, and such. Okay, all right. Tiwari, if you really think that you know a lot of things, right? Okay, then don't watch my live stream. Okay, you can just do whatever you want. Okay, yeah, all right. Okay, I'm just sharing with you more. I'll lead to more things. Okay, the flows and the, you know, the market breadth and all these lah. Okay, all right. Okay, so at any point in time you think that I'm talking sprouting nonsense, okay, then you don't have to watch my live stream. Okay, all right. Okay, yeah. Have some more constructive feedback, okay, not just, you know, trying to, you know, counter me, okay. All right, yeah, thank you so much. Okay, bye bye. Okay, all right. So okay, so at this point in time, okay, I'm gonna share with you this. Okay, so there are certain things that you know how much the market, because I don't think this Tiwari have watched my live stream before. Okay, never mind, it's up to him now. Okay, all right. Okay, so there are a few ways to gauge when the market is going to be capitulated. Okay, capitulation means that, okay, the last seller has gone, okay, and there's no more sellers left, and the market is going to reverse back higher. Okay, so the key thing is to determine whether the market has capitulated or not. Okay, once again, nobody knows. Okay, if I'm a god already, and nobody knows. Okay, so I want to share with you this. Okay, so there are a few ways to do it. Okay, first of all, okay, this is the DP gallery that I mentioned many times before. Okay, it is going to be useful again. Okay, DP gallery. Okay, so for those who don't know, this DP gallery over there. Okay, DP gallery over there. Okay, so this okay, so there are a few things, okay, that I mentioned. The most common one, okay, that I see. Okay, the star icon, it is potential reversal star signal. Later I'll go through with you. Okay, yeah. Remind me, Ethan. Okay, so above there are 20 days, 50 days, and 200 days. So this is actually the market graph. Essentially, what we are trying to see, what the whole stock market it is doing. Okay, of course, if we talk about SPX, we are talking about the whole S&P 500. Okay, so right now, okay, a lot of times the market, the index is moving up or higher because only what the top few stocks are doing, because they carries a lot of weight in the market in this index. All right, so you can see over there. I want you guys to zoom in on this percentage of stocks above the 200 days moving average. Okay, so I'm going to go back to history. Okay, all right, you can see that right now the 200 is right now that what we are going to focus on. Okay, so if you go back to maybe about 15 years, okay, you see something. Okay, when the market is like capitulated, the last seller have sold. Okay, it is the end of the selling ready. Typically, it is at about below the 20% mark. Below the 20% mark. Okay, for example, in 2019, okay, there is some heavy correction. In 2020, okay, or in fact, in 2020, the market, okay, only about maybe 3 to 4%, okay, all right, have stocks above their 200-day moving average. Okay, and during the 2022, the market, bear market, okay, we are somewhere at around 13 to 14% mark. Okay, that is the capitalization. Okay, so right now you can see that in right now we are somewhere around there, 22%. We are at a low. We are at a low. Okay, but we are not at the lowest low yet. Somewhere around there. Previously, this correction in 2015, 2016, it also marked a low at somewhere around the 20% mark. Of course, no two market, it is the same. It doesn't mean that, okay, the market breadth has to go below 20, like 15%, that kind of thing, for the market, okay, to so-called to end the selling. But we are at a low. We are at a low. Okay, based on market breadth. Okay, we are at a low. I repeat, we are at a low, but it doesn't mean that the market have to repeat, like going to go to 2020 where 3 to 4%, the market it is going to be below the 200 days moving average. Okay, all right. So this is one. This is the market breadth that I'm talking about. Second, okay, let's go to the chart, okay, and look at the percentage distance, okay, away from the moving average. Okay, so this indicator, it is actually free. You can just search for this indicator. You just type percentage distance from moving average. Okay, previously I was just randomly choosing different provider. Okay, so this is by the DKN crypto. So more than 675 people are actually using this indicator. So you can use this. Okay, all right, basically telling you how much percentage it is away from the 200 days moving average. Okay, so by default it is actually 50, so I already move it to 200. Okay, you can thicken the line, whatever it is. Okay, all right, so which means that if you add in the moving average, moving average simple, okay, all right, so if you change to 200-day moving average, 200-day moving average. Okay, all right, you can see that right now the moving average is at this point in time. Of course, 200-day moving average, if you have been trading for a while or listening to the market, typically, okay, whether the fundamental guys or the technical guys, they all agree that 200 days is like the go-to moving average to determine whether an index, a stock is in an uptrend or in a downtrend. Above 200 MA it is good. Below 200 MA it is no good in a downtrend. Okay, so which means that, okay, from here to right now it is, okay, it is at about 11%, 12%, that kind of thing. 12%. This is what the indicator is telling us about. 12%. 12% away from the moving average. Clear so far on this? If you understand, just type MA in the comments. Okay. So once again, we can look back into history and see what is like, the so-called the lowest it can get. Of course, in recent times, okay, the COVID sell-off is about there, okay, about 25. Oops. Shit. Not this, shift. How come I can't do that? Never mind. I will draw a horizontal line vertically. Okay, yeah, over here. Okay, so the next closest, okay, somewhere around here, okay, about 14% mark over here. Okay, so actually, if you zoom back in time, you can see a lot of time. Okay, of course, this is the 2022 bear market. 2022 bear market. You can see that hit that somewhere around the 14% mark. Okay, the market tends to have a rebound. Okay, have tend to rebound and go up higher. 2020, it is a bit extreme. 2020, okay, like 25% mark from the moving average point is a very strong and fast sell off. But if you move back in time, you can see that, okay, about 14%, that kind of thing, okay, the market is about there. The market, it tends to rebound higher again. Okay, move that, didn't really touch there, but can see that, okay, around there, in 2011, the 2011 is the Euro debt crisis. Also around there, the market rebounded, okay, and then, okay, of course, this is 2008, 2009, the subprime crisis, okay, way below, and then rebounded. So right now, okay, we are also about there, okay, we are also about there, okay. The magnitude of the drop, it is pretty fast. We are approaching that level where the market might have a potential rebound, So once again, okay, I can't tell you that, okay, whether it's going to be a dead cat bounce or really a real reversal. But I think that, okay, we are approaching the mark that we, where the market will have, okay, at least a temporal stop on the selling, because the market cannot just keep going down like that. Okay, you need to have a stop before, price move down lower. If there is, okay, we are also about that, somewhere close to that already. Okay, and if you go back to the McClellan oscillator, okay, okay, we are not right at the low yet. Okay, this is based on that. Okay, you can see overall a lot of times where it's at a low, over here. Okay, at a low, this is extreme low. It tends to have a sharp rebound, but based on the McClellan, okay, nothing much to be around that. Okay, but we can also take a look at the McClellan oscillator, one of them. Okay, and other than that, you can look at, okay, market breadth is the net new 52 weeks high also. All these are based on the DP gallery chart. Okay, once again, I will zoom out. Okay, this is based on the latest 3 years. Let's zoom back to 15 years. So once again, can you see that all these are the previous, okay, so-called fearful time when the market, it is at a low. Okay, market sell off is at a low, it is at a low, that kind of thing. Can you guys see it? Okay, so this is the net 52 weeks high. Okay, in other words, this is very simple. Okay, when the market, it is crashing, okay, there will be more stocks, okay, it at a low, okay, from a time period 52 weeks low, okay, more stock will go into a low. So if the market keep crashing, okay, there will be more stocks making new low. Okay, makes sense, right? So this is essentially, this is what it's trying to say. More stocks making new low, more stocks making new low, more stocks making new low. Okay, all right, so you can see over there, okay, the past 15 years, these are the extreme level, extreme level, extreme level, extreme level. Right now, we are also somewhere near the extreme level there already, okay? At the 2022, the bear market, okay, in fact, there was a negative bullish divergence. While it is making a new low, this net new 52-week low, it is actually making a new high, okay? A bullish divergence, but not that important now unless the market make a new low. But we are also somewhere, okay, not at the extreme low yet, but we are somewhere also near the low. So which means that, okay, the market, okay, can continue to sell off, but again, we are again somewhere near the low. We are again somewhere near the low. Clear so far on that? If you are clear, just type yes in the comments. Okay. Not at the lowest low, but somewhere around there. So no two market correction, it is going to be exactly the same, like the same playbook that you can repeat every single market crash. So we have to, be more versatile and be so-called, sometimes will be discretionary on what the things that you are seeing right now, okay? So these are based on the market breadth. So the market internal, okay, that you can look at one thing, okay, it is actually the VIX as well. The VIX, VIX, I think that many of you guys should know really, okay, VIX, okay, VIX. So clear that, okay, the VIX, okay. So you can see over there, this is the VIX index, okay. VIX is the technical definition. It is the 30 days implied volatility of the S&P 500 options, okay. So it's a fear gauge indicator. So you can see over there, okay, typically when the market crashes, you spike up, okay, spike up, okay. Of course, the spike that you see here, it is the COVID 2020 market crash, okay, it spiked to about 80, okay. In 2024, okay, market correction, it also, there's some fearful, it spiked to about 70, okay. During the 2025 right now, it also spiked up to above more than 50. Okay, right now it's intraday. Okay, intraday it actually spiked to 60. About that. Okay, and the numbers that you are seeing here right now. Okay, this is the mean. 19, about 20 is the mean. The average. Typically, when the market is in a normal condition, it is the mean. Okay, all right. About 27, it is the first standard deviation. Okay, 35, second standard deviation. 43, it is the third standard deviation. Okay, it is like a 3 sigma event. Okay, there's a 97% chance that it will not happen one, but it happened. That kind of thing. Okay, based on the standard deviation meaning. Okay, so you can see over there. Okay, a lot of times when the market is undergoing a so-called a steep correction, a good correction. Okay, it will hit 2 standard deviation, that kind of thing. And typically, it is also a good time to buy into that correction. I think previously, okay, a lot of times, not a lot of times, a few times, I say that if the market, okay, can spike up to above 3 standard deviation, okay, I jokingly, okay, say that, okay, you can close eye and buy. Do you remember what I'm saying? Do you remember when did I say that before? If you remember, okay, for those who are with me for some time, if you remember, type R in the comments. Okay, this is, quote unquote, don't really quote me and say, Alex say close eye and buy, close eye and buy, okay. But this is what exactly it is happening right now, okay. Intraday actually hit the 3 standard deviation, okay. If you ask me right now, okay, based on the VIX, there is this 3SD. Okay, in fact, I'm looking to buy. Okay, I won't tell you when I buy because I still need to look at the price action. But I'm looking ready to buy, to hold for maybe a few months. I have to see okay. All right. Again, there's stats showing you when the market is very fearful. Okay, above 3SD or above 50. Okay, above 50. Okay, there's certain things that the market will actually do. So let me just share with you. Okay, this. Okay. Oops. Not this. So it's this. Okay. Yeah. So you can see over there, okay, when the VIX spikes are above 50, okay, but potentially bullish. You can see that typically when the VIX spike above 50, okay, so what happened to the market forward return? Okay, 1 month, 3 months, 6 months, 12 months forward. Okay, okay. Within the first 1 month, there could be some volatility, but if you can hold long enough, okay, there's a very good chance, okay, the market will go higher, okay, within the next 3 months, 6 months, and 12 months. Okay, the only time it failed within the past 12 months, okay, is during the the global financial crisis in 2008. But other than that, okay, previously it all went up. So it is rare, but based on the market so-called internals, it is, we are somewhere near the high already. Okay, how much can the VIX go higher? Of course it is unlimited lah, okay, but based on historical record, okay, you can see that previously, okay, it is as high as 2008, 100 lah, okay. But other than that, during the global financial crisis, about 80. The second highest was in the COVID, okay, in recent years, okay. Other than that, okay, typically, it hit 3 standard deviation over there. It is typically, okay, a good time, okay, to buy into the market as well. So again, we are somewhere near the low already. Okay, again, we cannot time the market, but based on market internals, okay, we are somewhere near the low already. Okay, another market internals that I am looking at, it is actually the VVIX ratio over here. Okay, the VVIX ratio over VIX. Okay, this is the volatility of the VIX, okay, over VIX. The volatility of VIX, okay, derivative of VIX, okay, over VIX. So I won't go through what does that mean and such, okay, but again, this is also an market internal, okay. So once again, when it is at a high, it typically marks a market top, okay. When it is at a low, it typically marks a market bottom. Again, there is no boundary. It can go a lot lower, but typically, okay, around the reading tree, it is like a low level already. Okay, so if you add in the S&P 500, okay, below this is the S&P 500. Okay, so let me just try to zoom in on this. So let's go back to this. Okay, to this. Let's slowly walk through. Okay, the only really time, okay, it really failed was during the 2008 global financial crisis. It actually hit below 3, rebounded before price goes lower again. So like I said, there's no boundary, okay, but the threshold, like the lowest that I've seen so far based on this VVIX over VIX ratio, it is about 1. But typically, okay, around level 3 reading, okay, it tends to mark a bottom over here. Okay, below 3, okay, it typically, okay, marks a bottom over here. At 3 level, okay, it marks a bottom over here. Okay, again, these are not timing tool. It doesn't tell you when is the time to enter. Okay, it is a market internal. Okay, it's like the climate. Okay, what the overall market it is doing. It does not tells you the weather. Okay, exactly like today it's going to rain, tomorrow is going to be a rainy, sunny day. It is more, okay, like a climate tool. It tells you what is the condition right now, but it is not a timing tool. Okay, do you understand what I'm trying to say on this? If you understand on this, okay, about this timing thing, type letter T in the comment. This is not a timing tool. Okay, this market breadth and market internal. Okay, it is more of a climate tool to tell you what is the condition of the market right now. Okay, so once again, you can see that when it hit, okay, about level 3, okay, typically it marks a low turning point in the market. Okay, you can see over there 2018 also a steep correction. Okay, over here around 3 level 3 it marks, okay, potentially, okay, at a low over there. Okay, and once again in 2019, okay, 2019 we are around this region, it also mark a low over there and market goes up higher. Okay, in 2020, okay, the COVID sell-off, I think this is still very fresh in most people mind over there. Hit there, market ascend at a very fast rate, okay, drop to around 2, okay, all right. After that, it also mark a low and go up higher eventually the market. So once again, I say that this is not a timing tool. I repeat, don't quote me that this is at an absolute low. This is not a timing tool. This is a market internal tool that can gauge the climate, but does not tells you the weather. Okay. So of course, other than that, there are minor low where it touch the level 3 plus. You also mark a low over there. So right now, okay, recently, okay, in the 2024, there's a spike low. It also marked the low. Okay, here it also marked the low. It goes higher, and right now we are also at a low level right now. Okay, intraday it actually hit below the level 3, goes below the low. So once again, it is telling us that, okay, we are at a low right now, It doesn't make sense for us to sell short the market. In fact, okay, the opportunity is to potentially buy. Okay, again, I repeat, I need to keep repeating, this is not a timing tool. It doesn't tell you when to buy, or it does tell you that this is going to be the absolute low. Okay, but it does tell us that right now, okay, the condition right now, we are at a fearful stage. Okay, there's a lot of volatility. We are at a relatively low right now. Can you see right now the market is also volatile again? Okay, so before I continue, okay, do you find value in this live stream so far? Okay, if you find value, okay, just type letter V in the comments. So there are certain market tools, market internals, market breadth tools that you can use. Okay, so if I value, just type letter V in the comments, especially those who just joined recently, okay, from the Market Insights Conference, okay. So once again, I just want to share with you guys that, okay, in Market Insight Conference holding on the 26th of April, okay, of course, just right timing, okay, where the speakers is going to share with you their market outlook and what is their plan moving forward, okay. There's no selling, okay, in this Market Insights Conference. So don't be afraid that, you come here, that you get pitched to some product or some courses, okay. There isn't, okay. So it's a full content, 10 a.m. to 3 p.m. Suntec Convention Center. For those first 200 attendees, okay, you will receive a goodie bag. So I will post the link in the comments, okay. So this is what the link look like, okay. So this is the Market Insights Conference, okay. Shay from Humble Trader with 1.32 million YouTube subscribers. It is coming from Vancouver, Canada, all the way to fly over to Singapore to give you the talk, okay. All right, and of course, we have the speakers over there, okay. Shay, all right, Alvin, Dr. Wealth, Caden, Value Investing Academy, and David Scott, okay, from StoneX, okay. They're going to share with you their views as well. So as I mentioned, okay, Forex.com, it is actually not new. In fact, City Index is rebranded to Forex.com. So all you have to do is just to click on the register. Okay, we are registering via Eventbrite. Okay, so just register via this. Okay, and you are good to go. So once again, I will post the link in the comments. Over here. Okay, so just now, Ethan, okay, is asking me, okay, what are all these star thing over there. Okay, so previously I have this star over there. Okay, so previously all these star are my so-called potential star reversal signal over here. Okay, so previously in the 2022, okay, bear market, okay, there are a few signals that repeat over time over there or over here. Okay, the market rebounded a bit, here the market rebounded a bit, okay, over here, okay, the market rebounded a bit, okay, over here, okay, the market rebounded a bit over there before eventually this is going to be the real low, okay, and market go higher from here. Okay, so this potential star reversal signal, okay, does not tells you the magnitude of the move. Okay, it can be a short temporal, a rebound. Okay, it does not mean that it's going to be a real reversal or a relief rally, and we don't know how much it will rebound. Clear? Okay, and we move back in time in the COVID sell-off over there. Okay, all right. So previously there is a star reversal signal over there. Market rebounded for a few days before coming down again, and when the market was down 35%, the star reversal signal once again show up over here. Okay, and this was actually the real low, and the market rebounded over here. Okay, so right now at this moment in time, okay, we are in fact closer to the low, okay, than at the high. Okay, in fact, okay, if nothing's go wrong over here, okay, there will be a star reversal signal tomorrow over here. Okay, which is on the 8th of April. Okay, so there will be a star reversal signal tomorrow. Okay, here. Okay, once again, it doesn't tells you that it is going to be the absolute low. Okay, it does not tells you that it's going to be absolute low. Okay, and it doesn't tells you the magnitude of the rebound if it actually does rebound. Okay, this is very important. Clear so far? If you are clear, just type yes in the comments. Okay, PLE, I think you are still not my seasonal vantage insiders. Okay, I think you decide lah. Okay, I say a lot of times already lah. Okay, so all this I think I mentioned to my also this market breadth, I taught a lot to my insiders, except this star reversal signal lah. Okay, this one is the only thing I didn't really review lah. Okay. Okay. How do I know? Okay, this is just purely based on what the price it is doing right now. Okay, yeah, purely based on price. It is not based on flows, internals, or market breadth. Okay, this is just solely based on price. So this is just on that. Again, all right. So it doesn't tell you. So we are once again at a low. So the market might still continue to go down lower. Okay, maybe at that rebounded somewhere like that. Okay, so it can still go down lower, but right now we think we are at a low, okay, rather than at a high. Okay, so once again, let's say if the market really does rebound, okay, no idea when the market is going to rebound, how high, but again, it might hit resistance level, then we will see whether okay it will come down or not. Okay, all right. LW, if not mistaken, right, the IG promo is over for the month of March. Okay, yeah, but anyway, you can still go to ig.com and just create an account and just test out the platform and test it out lah. Okay, okay. While I'm saying President Trump said if China does not withdraw a 34% increase above their already addition. Wow, okay, it is additional 50%. So total how much? 70% tariff. Is it okay? So do you think it's going to V-shaped recovery or bear market? Okay, the answer is I don't know. Okay, I don't know. But okay, but if a lot of people think that it's going to be a bear market rally, then there's going to be a chance that it might be a V-shaped recovery. I don't know. Okay, once again, I want to remind you that okay, in recent 1 or 2 days, you will see a lot of market guru trying to tell you that see, I told you so. okay, the market is going to go down and such lah, okay. If once again, if they are so sure, okay, why don't they tell you, okay, just right before this talk over there, or right before this talk. I once again, I don't want to name names now, okay. In fact, there are one or two gurus, okay, has been very bearish, okay, for the past 1 or 2 months, okay. Wrong, they never say, okay. Right already, then they keep shouting that, okay, I told you so, okay, I'm right, okay, the market go down lah, okay. So to me, this is a bit tuakang lah, okay. So in hindsight, okay, in hindsight, in fact, I look at the, in fact, I look at the chart, look at the market breadth and all this. I ask myself, is there any way I can foretell this sudden market crash or not? Okay. The answer is I can't. Okay. The answer is I tell myself honestly, I can't. Okay. The only thing I can tell my insiders, okay, as good as crystal ball, okay, which I've been telling them, okay, since the start of February, okay, or in fact last year during my face-to-face, I say that based on seasonal trend, okay, the market, it is going to be weak in the early start of January, okay, early start of, well, not January, in early start of February, okay. For those who are in SVI, okay, can you please help me to answer? Did I say that or not? Many videos already, I say that, you know, based on seasonal trend, February is going to be weak. If you are from SVI, just type F, okay? Talk about February, okay? All right. Type F. I know there are many, okay? Just type F in the comments over there, okay? Okay, so I state that since February, okay? Again, I have no crystal ball. I have no crystal ball, okay? This is based on seasonal trend, okay? But I have no absolute fucking idea, know that the market is going to crash within the past 1 week or so. Because, like I said, okay, this is actually, okay, artificially induced, okay? Trump could jolly well say that I'm going to remove, okay, I'm going to remove the tariff, okay? And the market, it is going to do like that, okay? And then what are all those market gurus going to say? Okay, they'll just keep quiet lah and say that, okay, nothing wrong, okay, you know, the market is going to crash one day. And then they keep quiet until the market crash big time, okay? Then they wakang again, say that, you know, okay, the market crash, okay? So, once again, nobody is going to care about your money as much as yourself, okay? So once again, you need to make your own judgment. Don't ever listen to any guru, okay, including myself, even though I am not any guru, okay? So you still need to make your own judgment. You still need to make your own judgment, okay? So, yeah, so, you know, just have your own so-called judgment. Don't believe in all those gurus. Okay. All right. Okay. Yeah, a lot of these gurus to account now. Okay. Always say that, you know, I told you so. Yeah, I'm quite angry on this. Okay. Every time wrong, they keep quiet. Right, then they shout. Okay. Then those new believers, you think that, oh, this guru is so accurate because they have never heard of all these guru mention all the wrong stuff before. Okay. Why I know that? Because I've been through this. Okay. When I was newbie, I listened to all these guru. Okay. Wrong, they keep quiet. I don't know. Until they are right, they shouted. Then I thought, oh, they are like Sen, God, they know everything. They know nothing also. Okay. Clear? Okay. So right now, I'm to share with you, okay, what is the trade plan? What is the trade plan? Okay. What you can do, okay, to be honest, if you ask me, hey, Alex, is going to be a relief bounce or a real recovery? And the answer is, I don't know. I don't know. Okay. We have to wait, okay, day by day to see how the market is doing. Look at the flows, look at the market breadth, look at the internal, and day by day, it tells you a story, Okay. So right now, there are a few ways to do it. Trade plan, okay. If you are a long-term investor, okay, again, long-term is very subjective. Some people trade for 1 hour by the minute chart. So 1 hour, it is long-term. So when I say long-term, it is actually 1 year and above, okay, at least 1 year and above, okay. If you are a long-term investors, then you shouldn't be shook out by all these, so-called sell off. In fact, you should be happy, okay? It is on a discount right now. The stock market, it is on a discount. Every time you go to those branded shop on discount, 50% off, you get so happy. 30% off, you get so happy. But when the stock market, it is on a discount, you are very scared, okay? So you have to think like a shopper, okay? Long-term investor, you have to think like a shopper. So you don't have to actually, just one shot, just invest all the way. So you can divide yourself into a few tranches, okay? When the market drop 20%, okay, you can buy on the first tranche, okay? When the market drop, okay, further down, drop further to 30% down, okay, you can buy another tranche, you can buy some more. When it is down 50% more, okay, 50% or more, or this is like your last bullet, okay, you buy some more, okay? So divide yourself into tranches, okay? So when market drops some more, you buy. When the market drops some more, you buy, okay? So that is the plan that you could do. Again, the specific number, not that important now, okay? Can be 25%, 35%, or 45%, up to you. Again, it doesn't have to be like 3 tranches. You want to divide into 2 tranches, that is fine as well. When you divide into 4 tranches, okay, that is fine as well. So you get the idea what I'm trying to say, right? Okay, can okay. So if you are doing, short-term trading, okay, swing trade, holding like, for example, like hold for 2 days to maybe 1 month, that kind of thing, okay, swing trade, then my advice to you is that you can stay out of the market, okay. Don't trade, okay. Don't trade the market right now, okay. I know the market, it is volatile, okay. You can say, people say that, oh, trading volatile is good, okay? Unless you are a day trader, you thrive on the volatility. But most swing trader should not trade right now because the volatility is so high that whichever stop loss that you place, whether it be 1.25 ATR, 2 ATR, 2.5 ATR, it can still get stopped out. You can still get stopped out. That's why I tell my members that, okay, right now you can throw away all the seasonal data. Okay, throw away all the seasonal data. It is not in a normal market condition right now. Throw away, don't trade right now, okay? Just stay away right now, okay? But if you want to be a trend follower, you momentum trader, trend following, there is another method, okay? That is you only buy, okay, when the market, okay, have so-called confirmed reversal. And how do you know it is going to be a higher probability of a reversal? How many of you want to know this? If you want to know, okay, just type me in the comments, okay? If I don't have 50 likes, okay, I'm not going to share this thing, okay? So I have no idea whether it's going to be a V shape or relief bounce, okay? All right, so don't listen to all this tuakang guru that tells you that I told you so I know, okay? Fuck them, okay? All tuakang one, okay? Nobody knows, okay? Nobody knows. Okay? 50 likes, Give me some more likes. Just now there was about 300 people, Okay. Now drop a little bit lower because it's getting late already, now about 260 people. So I think in recent months, this is the highest so far. Okay, I think got more than 300 people, okay, at one point in time, tune into my Facebook Live. A few more. So if you find value in this Facebook Live, to give me a like, share, and comments. Okay, to give me a like, share, and comments. Or share this, okay, to your friends or family members or whoever you think that could benefit. One more, okay, I think this is based on the Facebook Live, okay. For those who are on YouTube, do subscribe to my channel. One more, okay, one more Facebook Live, and only 49. Okay, 50 already. Thank you so much, okay. All right, so the key thing is follow the trend, okay, is to use the central pivot range to guide you. Okay, for those who are with me, you should know about this CPR thing. Okay, central pivot range. Okay, I think those who have followed me the longest time, you should know also. Okay, but maybe a long time never say, so it might be forgotten. So don't need any cloud. Okay, don't need any cloud. Okay, don't need any cloud. Okay, not a higher high, higher low. Not a higher higher low. Okay, okay. In short, okay, you need the CPR, the central pivot range here, okay, need to be, okay, price need to be, yes, correct, Yang, okay, need to be above the CPR for 2 consecutive months. Need to be above the CPR for 2 consecutive, okay, month. Like Yang said, the CPR need to be above, okay. So again, let's go back in time, okay, during the bear market in 2020 over here. Every time the CPR price is below the CPR, it is no good, okay. So you can see over there, okay, 2020, 2022, this was the first month it was above the CPR, first month, okay. So potentially here, it could be a reversal over there, potentially, okay, first month. Second month, it doesn't continue, okay, price dropped below the CPR. Once again, it did not hold above the CPR for 2 consecutive months. So no go, it is not a real reversal. So now market continues in a downtrend, okay, over here, okay, over here. In July, first month above the CPR, okay. Second month, almost there, okay, but did not, okay. Price closed below, or like price still closed, did not close above the CPR, so it's within the CPR. Again, no go. It is still in a downtrend. And you can see over there, when price, go back at the CPR, I think it's a resistance, price goes down again, okay. So once again, in October, okay, you can see over here that this is the first month in October, price closed above the CPR, okay, first month. Second month, okay, it closed above the CPR. So potentially, okay, this could be the real reversal. Potentially, potential. Nobody knows for sure. In hindsight, then you know that it is a real reversal. But potentially at that point in time, you don't know it's going to be a reversal or not. You can only bite the bullet, okay? You have the bullet, you invest, you trade or whatever. You have to invest in the market or trade the market. So this is the time where you can go into the market, okay? But of course, after that, market continue to go down. Okay, okay, you want to exit that kind of time, you can exit like you want to based on trading. But if you long-term investing, you want to hold, you can hold, okay? But after that, in February, once again, market above the CPR, okay? Second month, nothing, okay? Okay, and then in March, above the CPR, second month above the CPR. Once again, you can also goes again and go into the market again, okay? And then the market continue to go higher. So at any point in time when you invest in the market, it is always uncertain. You don't know whether the market is going to go down or go up. So you have to follow the rules, rule-based, systematic in a way. So this CPR thing can help you, okay, to be more systematic, to have lesser fear, okay? I'm not sure whether you can feel that or not, okay? All right. So once again, okay, during the COVID crash, okay, okay, market go down by a lot over there at the CPR level, get resisted, okay, go down, okay. Here at the CPR level, okay, relief, rebound, take cap bounce. People think that, but it goes down, but reverse back up again. So this is the time, okay, the first month where the market, okay, it is above the CPR, okay, above the CPR, okay. Second month, okay, it is above the CPR. So 1 month, second month. So there's a good chance that this could be the real reversal. Again, nobody knows, but it does give you some clues that this could be the real reversal and you want to take the bullet, bite the bullet and invest in the market, okay. All right, so I won't go through some of the rest of the previous bear market crash and such, okay. You can actually take a look and such. 2018, you can see that, okay, first month, second month above the CPR, okay, boom, market goes higher. Clear so far on this? If you understand this, okay, just type, okay, CPR in the comments, okay. when I say flow, it doesn't mean the trend. When I say flow, most of the time I refer to the options flow, okay? The smart money, the institutional flow, that kind of thing, not the trend, okay? Not the trend, okay? So do you find it useful on this CPR? Okay, this is one of the so-called systematic way to tell you lah. So of course, if you are a trend follower right now, okay, oops, how come it start so big? Okay, if you are trend following right now, okay, you shouldn't be buying right now. So by next month, okay, the CPR will be somewhere around here. I believe so lah. Okay, let me see the developing central pivot range. The developing central pivot range, it is here. Okay, let's say if the market doesn't move right now and stay in this price, okay, so next month the CPR will be here. Okay, so if price goes above the CPR next month, then at least you can be less bearish. Second month above the CPR, okay, then you can have a higher probability that the market is really in a reversal. Clear so far? Okay, all right. Does the CPR work in 1 hour, 4 hour? Okay, yes, you can. Okay, but actually the CPR, it is derived from the pivot point. So the pivot point can work in intraday as well. Okay, but for the CPR, I find that it is work best in the monthly, okay, weekly and yearly central pivot range. Okay, all right. So I think today I've been past more than my 1 hour mark already. Okay, so right now the market, it is very volatile. Okay, so I have already laid down, okay, the trade plan on what you should do if you are long-term swing trader or a trend momentum trader. Okay, right now you should have some guideline on what you should do already. So I hope you find value in today's live stream. Okay, once again, if you find value in today's live stream, just type letter V in the comments. Okay, if you find it useful, give me a like, share, and comment. Also, do share this video, live stream, YouTube video, Facebook to your friends or family if you find it useful. Okay, subscribe to our YouTube channel. And once again, okay, just a quick reminder, the Market Insights Conference is going to be held on the 26th of April. Just nice, okay, in the right market condition to tell you this. Okay, the speakers are going to share with you this. Do register for this event. This is in person in Singapore. Okay, so thank you so much. I hope you find value. Okay, not like previously. I think there's some, I don't know which person, I've forgotten the name already. Tiwari said that he find no value in my live stream. So I hope you find value in my live stream today. Okay, so once again, thank you so much. Okay, let's see how the market will do within the next few days. Okay, with that, thanks so much. I will see you again next week. Goodbye, good night, 晚安, and bye bye.